What do you guys think?
Awesome.
Well, let me ask you first, how did you feel about the presentation?
Pretty good until I ran into the technical issues.
But actually, it looked okay. I mean, it was not a big deal. I mean, you recovered. I just wish I knew you needed the clicker. I have it right here. It would have made your life a bit easier. So you felt pretty good.
Mm-hmm.
Did you feel, how was the pace? What do you think the pace was? Good?
Yeah.
Yes. Yeah, pace was good. I think, I mean, it may seem a little fast, but people think fast anyway, so you have to be fast.
I love the graphs.
Mm-hmm. That's what made it stand out for our teachers and parents as well.
Yeah, they really jumped off the page for you with the graphs.
The graphs, okay, very good. I don't know if you need to give it to Kevin because it looks like the battery's dying. All right, I like the flow. I think instead of the close, you could say to summarize, you know. And then I always like the summary with, you know, just the key bullet points, which what you did. It's an opportunity to impact many student lives by giving them a solid foundation, taking the fear out of learning, opportunity to reduce the dropout rate. So it's very, very altruistic. It's a very wonderful thing. And so what we're looking for, so, you know, what the conclusion is, you want 150,000 for startup costs, development online platform. Okay, when you came to that, did you feel like, what percentage I want to own? Did you get that feeling?
Yeah. Right.
And then it was an 8% return. When you say, see, you're running into the same problem I have with my private fund. When I show like a couple PowerPoints, this one was like 86% return yearly, this one was 40-some%, and I'll pay you 12%. The 12% looks like a joke. Then people come to me and like, well, you're almost making 100%. Why don't you give me more? And I'm like, well, let me compare it to a CD then. So I think, well, you have to tell the truth. This is what you're expecting. I'm like so surprised that the startup cost is 192.
I know.
It should be approximately. I mean, you're like, this is not a computer you're buying.
And does it allow for contingency?
Yes.
Right.
So approximately, I would say you should put approximately 250,000. And we have skin in the game. We're putting in our savings 100,000, our sweat equity and intellectual property rights, etc. So here you put approximately, and then you go right here and say, we're raising 150,000 for the startup cost, and then give me time frames. Okay? Now this is very important then. Then you got to go, so the amount we got it. So we need it, okay, so when? By when? By January 1st, or you need the money in the next 30 days?
Next 30 days.
So
actually, that would be split up too. So like 100,000
100,000 by
in the next 30 days.
in the next 30 days, and then
And then an additional 50K in 90 days.
90 days. Imagine if you're pitching this at Shark Tank.
Yeah, you get eaten alive.
Yes. No, they're gonna ask you, have you made any sales?
Right. Right.
Have you?
Not yet.
Not yet. Yes. So then you're gonna have like, okay, it's a wonderful dream. You have proven results, but have you made any sales? Has anybody bought? Because, you know, because the easiest way to raise money, remember the formula of system, okay, automate, and then scale. The easier way to raise money is when you're telling them, look, I got such a great system that's automated. I'm ready to scale. Can you give me money to scale? And they say, really, it's automated? How much are you doing in sales? X. It's based on what system? This is the system we're doing. And you have a system that's changing people's lives. And you're now going to start. So you're going to now implement the system to go out there and real. So you have to give them some type of safety here. And your money will be secured by the I don't know what you have, a patent, the intellectual rights of some sort, something that's going to be secured. Like I did angel investing, like in a company called My Mosaic, and they had so many patents. I bought 5% of the company, and it took an hour, okay? And the guy came to pitch me. He couldn't pitch. He couldn't present, the CEO. Okay? So I told him, this is, if you don't mind me telling you, let me tell you how to do it. And the VP of the company was one of my students, and he told me, you need to come and see this. So I showed him how to pitch, then we started talking all this. But then I realized that my money will be safe because it's against all the patents. So you need to show safety here. You see?
Well, what is the safety?
What is the safety factor? How do I mean, I can write you a check for 150. Okay, with those returns, you know, of course I will, you know, want more than 8% return when I'm paying investors 12, you know, so my situation is different. But I would want the safety. If you cover the safety first, everything will fall into place. Can you think of any way to safeguard somebody's money?
I was just telling him earlier, I said, if you can't guarantee, what about shares in the company?
What about shares in the company? So here you're going to almost have to give up some equity,
Sure.
you know.
Randy told me that he was going to give equity, and I said, well, if you need money, you might have to give equity.
Yes, you don't need to give equity if you have sales. Do we have a mic? The mic is working? Okay. So, that was Daniel, I'm sorry.
Oh, sorry.
Daniel?
On something like this, instead of giving up shares, giving up preferred
Stock.
8% preferred rate of return, I mean, on the 150, and then sharing in the profit. Upside potential, we're going to also give you for however long the money is in play until it's paid back, we're going to give you 10% profit sharing, or whatever the percentage is. I mean, if this is for a 10% ownership, it would be sharing profits of that while the money is being used. Because I'm assuming you're paying them the 150 back at an 8% rate of return, like a loan. I mean,
Right.
it's called a preferred, because you prefer to pay them 8% as long as it makes a profit. Giving them a percentage of the profit while you have the money in play, instead of giving them shares of the company.
Right.
That makes sense?
I had a question.
I'm not sure I followed. I don't understand.
Can I say something?
Okay.
He doesn't have sales, so that doesn't guarantee them that he'll be able to pay. You see what I'm saying? I'm just
Yes,
playing the
that's
devil's,
the-
I'm just playing the devil's advocate here. I
But
mean,
that gives them security in the sense, he's saying, I'm gonna give you 8% return.
right, but 8%, but they don't have any sales to show.
Yeah.
See, that's
You
what
can
they-
say 12,
Well,
you can say 15, but
Yeah,
off of
My first question is, how are you gonna pay me back? How long are you gonna keep the money? Those types of things. You're asking for 150,000, you're saying you're gonna pay me 8%, great. How long are you gonna keep my 150,000? When do I get it back?
Okay, how about,
Eight-
yeah, how about
8%
if you
for
do it
30
this way?
years.
Just question here. What if you say, I need $250,000 to start the business, and this is how it's gonna be spent. One, we're gonna spend 70,000 on X. We're gonna spend 35,000 on Y. We're gonna spend, you know, now I know where the money's gonna be spent. Is that possible? So tell me. How much do you really need?
The website and app development would be about 50,000.
So apps and web development, 50K.
The computer and video equipment will be about 20K.
Computer and video equipment, 50K,
20K.
20K.
The training of the staff, I forget what the exact numbers were.
Training of staff,
Do you remember what it was, Mike?
Say
It was about
30K?
20 to 30K. Let's say 30K.
so 30K.
Marketing and branding,
Mhm.
it's about 40K.
That's what, 140 here? And then 5K margin of, like, so other. 10K, right? So you have to show them so they have an idea. What have you spent already from your pocket? You can say we've already invested. So already invested how much? I mean, you show the video,
Right.
you've been, so how much have you invested?
Probably about 15K so far.
Invested 15K?
Mhm.
I want to say 25K.
Okay.
Heck, you've invested in education alone, God knows how much,
Oh, yeah.
right? So you've invested, I'm going to say here 75K, how's that? Like total between time, effort, education, etc., right?
Mhm.
We've invested 75K, and we just, need to do this, and we can raise it in stages. This is immediate. Once this is up and running, it will have a value of so much. Now I'm like, okay, I'm gonna write that check because I'm gonna have the rights to this if they don't pay me or something like this, you know? Let me ask you something. Can you get the money from the government, like government grants and stuff?
We haven't looked into it yet.
It's complicated, and a lot of them, then if we get the money from them to develop this, then they own the rights to your stuff.
Yeah, that's
Then they want you to give it away for free, is the purpose of.
Okay. So
Yeah,
what if you
We
don't?
wouldn't want the money, if we get government grant, we want it for them to pay us to deliver our pre-made curriculum to
Not
the
to
schools.
create it.
That's what we would do, but not to create it, because if we get the government grant to create it, then the government owns it, and their goal is for us to distribute it out, push it out for free.
So have you looked for government grants?
We haven't yet.
Because here in Puerto Rico, there's huge push for this.
Yeah, that's what Nestor was saying. Yes.
We got to look into this. Okay. Well, I'm happy to because I have a meeting with the government people for the tax thing on Tuesday. So I'm gonna see if they can research it. But anyway, you can shoot him an email directly. You don't need me for that. And okay. So what if you don't raise the money? I'm just curious, on a personal basis.
Well, we would use our home equity line of credit, so we have access to 242K.
Okay. So you have a plan B.
Right.
Well, that's very good to tell that's what I call the takeaway. You know what the takeaway is, you know? You can have this, but it's the last one. Or you know what, but I'm not so sure I can sell it tomorrow. So that's the takeaway. So there is a credit line. Again, that's the,
Ishri,
yes. Tell me.
can they ask for the money
Mhm.
and then tell them also the person that's, for the investing that if we don't pay it back, then you get equity. Would that work or not?
Yes, we will, you can loan us,
And if we don't pay it
and
back,
if we don't pay, then you can
just
record this as a lien against the house. So you're borrowing, but then why would they not just go get their home equity credit line?
Okay.
So the question I have is, why do you even need anybody? Or you don't, you're just doing it for fun to pitch?
For fun and to try to avoid using our own money
Okay, got it.
to reduce risk.
Could I just make a little bit of a left turn on the pitch? I mean, that's the money part of it, and I understand that. But when you presented the plan, you were showing me this is what it is, and you showed the front page, and then you showed. First of all, I couldn't read anything on the PowerPoint about what it was, and two, I really didn't get how it works. There's no demonstration of anything about it. I mean, just take me through a little lesson or something. Maybe say, this. You would use this lesson plan in this way, and here's how the kids would use it, and here's So it makes it kind of jump off the page. So it's a real deal. I mean, I'm looking at this. Those sheets there and stuff. I mean, they're meaningless to me.
Right.
I mean,
normally I'd go more into depth, but I was trying to keep it under 10 minutes, so.
Well, yeah,
cut all that out.
but you need to convince your audience that this is a real deal and not just. I mean, those look like math table sheets that I used in the 3rd grade. To the teacher would hand me 100 questions and say you have to answer these math questions.
Right.
But I mean, like that one popped for me.
Yeah, that was really.
Yeah.
You want to show that there is demand for what you have. Okay? You want to show that there is demand. So it's almost it almost goes like this, like we have results. This is this. If you're gonna say Caucasian and Asian, you should put Asian because it's Spanish. You know what I mean? Put Asians.
It says Caucasian.
What? All right, got it. So then, what is synergy? I didn't get that.
That's our nonprofit that we started that runs the 3 schools.
Okay, then clarify that because it threw me off a bit, and I'm sorry I missed it. Now I remember you had said it before. So you can say, and our program, then I wouldn't say our program already implemented in 3 schools that are nonprofit has produced this. Now we're ready for profit. See, that's your anchor thing. To his point, we're not going to see this. Now we know you got something. I don't mind seeing it. Actually, I like it. Okay, we have some stuff. We already developed work. I like the fact that there is a video. But you're going to say, look, for you it may be just gibberish right here on the screen, but for kids it's clarity. And we not only have this, I like, just the flow of the PowerPoints were just awesome for me because we not only have it in this format, we have it in this other format, and we also have it this way, and on you're playing the video which wakes the audience up.
So like the magic box numbers one, that jumped off, and I was wondering, how does that work? You know, if you could just give me a little 2-second tutorial to show
Sure.
me how that thing works.
Uh-huh.
That was, oh yeah, you do make it easy. I mean,
How
as it
many
is, you
people
know,
here-
It made me feel dumber.
Do you know proportions? Do you know proportions? How about exponent?
They say I
Exponent?
eat too much.
know what that means.
Yeah. How about equations? I started thinking, I need the class.
You know, I want you to go back to that, the one you just had before. That one. You know, you've got that, this may be really,
Sorry, I'm trying.
where's the
Here we go.
This may be really picky, but if you're telling me that you've been successful in your school, my guess is that picture does not represent the kids in your school.
The
Ethnically.
one,
Ethnically?
The Fearless Learning, like the website where there's a bunch of kids sitting in front of a computer.
The white
Right.
kids.
It's just a bunch of white kids. And I'm sorry to be, you know,
Mix
to
'em
be,
up, mix 'em up a little.
yeah, you gotta mix them up.
A couple guys with chains, chainsaw. That is more exciting, you know?
But I mean, the point you're
Let it go
making.
viral. No, it's a good point.
The point that you're making is that we've taken the lowest performing kids and brought them up to above
Yeah.
whatever, what these kids are doing,
And the
right?
kids
So don't
standing
show me
like-
these kids.
We don't understand.
Trust me, you can find a better picture than that, that's all I'm saying.
Can I say something?
Sure.
With Adriana saying that, you think a little video of a kid saying that she didn't know math and she did really well now and she understands?
They're a little
Oh my
testing.
God, that is a great idea.
That's a great
Awesome.
Like
idea.
this
Yeah.
couple kids that
Huh?
said, in the beginning, I didn't know nothing, then Mr. Randy, my teacher, came by and
Probably
taught
say,
me this and I'm doing great.
Yes.
You know?
Yeah. Oh, or even better yet, she's like, and look at my grades now. And she's like so cute, you know. Yes.
A big A plus.
We get big A plus, you know, and she's got crooked teeth, and she's like, you know.
Sorry.
No, but
Now
it's
it has to present the kids in your school.
And
Title in 100% with a circle around it.
yeah.
And
And these,
then, just on a funny side, you could put Steve on the side and say, I still can't figure a 9 pack.
You want to step
you know,
Right, one, don't figure it out.
all these may be little things that you may consider. They add up.
23, all right?
I just, I think, okay, I think the positioning is huge, okay? Proven results and all this, you're almost selling me as a school person. You need to be selling me as an investor. Okay, you need to position, the positioning is, you know, it's proven results, good, but now give it to me as an investor. Proven results, you're investing in something extremely unique that has momentum already. You know, it's fast and simple. We're gonna go in from the first investment, from the first school signing up, there will be returns. This is so powerful. Give me some numbers on a school. Okay, let's talk about that. You go into a school, boom, you gotta give me, let me tell you how you're gonna get your money back. So this is where your money gonna be spent. This is where the money how the money is gonna be returned. So the money is gonna be returned because we sign up $55 per student for online.
so for a school of
Public-
500, it would be 300 students.
500 students,
300,
300,
because kindergarten and first grade wouldn't use it.
got it. 300 students,
And let's say the workbook for each grade level would be $20 each.
$20 each for workbook.
Uh-huh.
And then now we go
The
here,
online
publishing,
access-
right?
Right.
Publishing, okay.
The online access would be a annual subscription.
Online access, which is, now I'm looking at the return on the apps and web development, right? So this is the web development stuff, and then how much is that?
That would be $20 per student,
$20 each, $20 per what? Month?
per student per year.
Per year.
It's pretty cheap.
Phew, man. Per year, that's a giveaway.
Yeah.
And then?
And then the training part, the teachers would have access to those training videos. So we were still trying to figure out how to price it, but we have about 500 per teacher. So that would be
So the school pays $500 per teacher
correct.
for the whole year?
Yes.
I
Five.
might bump up the students $5 and cover the teachers for free.
Each teacher, each year per teacher. And then
Then the in-person training would be 5,500 per school.
per school,
Yes.
5,500.
50,
00.
5,500 per school for the year. And this is, who's gonna do that? What do you call that? The what?
Training.
For training.
Okay, what's the teacher doing now?
That's access to the online videos. So the
So
5,500 will
per
be in person.
teacher, to gain access, okay, got it, to gain access to online, okay,
Online videos.
videos that you have. And they can play these in school? They can play them in the school to the
Correct.
students?
So before Monday's lesson, they view it the day before, and that way they know how to teach it.
That's a pre-teach for their like,
Okay,
their syllabus, right?
Correct.
5,500 per school for 1 year, for what?
That's for,
Per day, it's just
per
for
day.
1 day.
Per day of training.
yeah, for 1 day of training.
This?
The 5,500.
1 day?
1 day of
One day
training.
training the teachers.
1 day in-person training.
How many teachers?
Is it 1,500?
Is it as many as can fit in the room?
So our elementary school, for example, has about 300 kids and 15 teachers approximately.
So your 1 day
You
training,
can do it up to
15.
50.
Yeah, up to 50.
teachers.
15 divided by 5.
So the 5,500 will teach 15 teachers?
Yeah, so that's what we'd come in and do a 1 day orientation to get them used to the system, how it works and so on.
Okay, so teacher training, 1 day in-person teacher training.
Mhm.
So give me the cost per school now, the sales per school. So give me averages, like he did averages, we talk average. Well, the school, school average will have X students that will pay this, they'll pay that, they'll pay this. So I'm gonna go like this. Next thing is a school, fearless learning versus other.
So you're charging $366 per teacher per day to do their training?
That's a pretty normal consulting fee actually in education.
$30 for kids, and that's it. And then take this away.
Versus other, because this is in addition to.
In addition to what they're doing, so aren't you positioning yourself against other curriculums they have and stuff?
No, this is in addition.
This would be in addition.
Edition.
Okay, so we're going to the school and aren't we trying to tell the school, if you invest X with me, it's gonna be better than what you're doing over here?
No,
No?
It's a
these
combination
are
of
not
both.
better results.
It's a combination of both?
It depends, because some people are using supplemental materials already.
So how much would it cost the school? Give me an average school, how many students they have? 300 students?
300.
Almost 1,000.
So 300 students, so they will have,
Times 40,
so this is 300 times this, right?
yeah.
Is what, 6,000, 6,000,
Who's paying the subscriptions?
Plus
The
500, so
Oh, for each year,
The
per
parents pay,
teacher.
yeah?
So you got 50
The parents
teachers.
could, but this is all the schools covering all of these costs.
More.
I don't know how much.
Parents pay
Per
monthly
year, per
fee.
teacher.
So if it's
So
one
these are
teacher,
public
it's
schools that were
18,000?
public and private schools.
They don't pay.
No.
Each school,
No, it's
one
I think
teacher.
your pricing.
Each additional teacher is another 500.
Yeah.
You see, okay, are we right here? It's gonna cost each school that has 300 students $18,000 each year to teach just one teacher.
Yes.
No, one teacher to have access. How many teachers usually on average?
15.
15. So it's not gonna be one, it's not gonna be 500, it's gonna be 7,500. So I need to add 7,000 to this, so it's $25,000. An average school is gonna spend $25,000.
For
What?
each
Okay,
school?
for each school. So average cost per school is $25,000. Okay, so we're gonna say income $25,000 if you gain the sale. What is your cost?
The trainer would be $1,000 a day.
So trainer at 1,000.
Then the cost of goods sold, I'll have to see what the numbers are.
Cost of goods.
The workbooks, let's.
I mean, what's your cost per book?
We're gonna try to get it down to less than $2 per book.
So about 10%, 10%,
30 bucks in books.
10. And then here,
That
your
one
cost is
is,
down. Okay. So your cost will be actually very.
How much is the online?
10%.
the online would be, all that is upfront.
Yeah.
So-
and it's minimum amount.
That's
Actually, even rounding it up, it won't add up to 2,500. That's
Right.
right. So maybe all your cost 3,500. I mean, even if we say the cost is another 1,500 of whatever commissions and whatever, okay, you got you got 20,000 net per school every year, right?
Mhm.
So, for me to get, as an investor, to get into something like this, I would want, number one, I'm just telling you as my thing. Number one, I want all my money back first. I get paid first, money back first, and then residual forever, or for X number of years of so much. You know, of a percentage or a dollar amount. You know what I mean? Like pay me back out.
How did you come to 20,000 on the cost?
25.
No, 20 is the profit.
This is 5,000.
Profit. Yes, ma'am. On the profit. I'm saying, look, 3,500 is his cut, and he put 1,500 additional for commissions and other,
Wow.
and he nets 20 per school, per year,
Yeah.
right?
And that 25 is less than the cost of half a person. And you can get better results.
Okay, so the question is, do they have 25,000, these schools?
The schools that we'd be targeting would be the lower performing ones, and they usually have something called Title I funding. So that's to help high minority, high poverty populations get supplementary materials. So that would be the first, and that's a government program from.
Okay,
Do you know how much
so,
that Title I, how much money they get in Title I?
For our schools, I think our elementary school gets about 3,000 or so
80?
per year.
Extra.
Mhm.
Extra than that.
There you go, showing that, here's the results. You got $80,000 worth of Title I money, spend some to get results, you still got 60,000 to spend on stuff that's producing a 3%.
For sugary
The
cookies
problem
and
is that
candy
next
bars.
year they're gonna cut their funding, right? If they get the results that you get, they cut the Title I funding, so that this incentive
That's a-
is huge,
Yeah, that's a real
Catch
possibility.
22, isn't it?
yeah.
okay, so let me summarize this because this to be continued. There's a lot more to this. The point is now, and we start with this tomorrow morning, the point is the way I would want to see the numbers as an investor, tell me if you agree with me here, I would want to see where the money is going to be spent. I'd like to see what the average school is going to actually order. I'd like to see what the cost against that would be, and that this is going to happen, and that sale is going to be for X number of years. So I want to see this as residual. Okay? And I want to see, to invest with you, that you don't need me. So now there is a scarcity factor that, oh my gosh, you're not going to give me the money. I'm not going to, if I don't give you the money, you don't need me. You got your home equity credit line. And you can say something like, I'm going to give you the window of opportunity to invest with me for X. And if you don't, you know, I believe in this so much that I'll use my own home equity credit line. We've already have an approval for X number. And once we sell one school, that will be just through referral alone, we can, and then something like this.
And you have to really hit your educational performance
Okay.
hard because you don't have financial performance. You're
Yeah.
gonna have to
Yeah,
sell
you're gonna-
this
yeah.
whole thing on your, what your results were in your schools. I mean,
Yeah,
that's-
actually, I will summarize with this because we have to run. I would say, if I were you guys, I would sell the first school, show that they bought it. Here are the numbers from the first school. I'm ready to grow. I would spend whatever it takes to sell the first one. Heck, this is so exciting. I feel like going with you to close the first school. Jeez, put 150 and get 5 million? Where do I sign? And I'm in LA. I'm coming with you. All right.